Welcome to another edition of Chart of the Month. It's October 2025, and we're going to take a deep dive into market volatility. The reason for this is obviously right now I'm recording this on Saturday, this October 11th. The market finished down quite a bit on Friday. And over the weekend, it looks like market futures are going to be very volatile. And so this is a perfect time to remind investors about how intra-year returns and how intra-year volatility works. And so I thought this chart, again, would be very helpful as a visual to illustrate that. And so very simply, we have the market returns from 1980 all the way up until September 30th of this year. The gray bars are essentially where the S&P 500 finished that in that particular year, whether it was on the positive or the negative. The red dots that you see scattered across the bottom of the chart is where the largest intra-year pullback was in that calendar year. And so, for example, you can see in 2008, we had a intra-year decline of negative 49%. Obviously, we all know what happened in 2008, but you can see the gray bar from finished at the end of the year down 38%. Vice versa, if you look at the very next year, 2009, in 2009 we had a top to bottom withdrawal or decline of negative 28%. But in 2009, the market actually returned a total return of positive 23%. And so you can see across this chart that every year we have some sort of pullback or decline. And actually, from back to 1980, the average intra-year decline is negative 14.1%, as the top of the chart says. So that means on average, every year we've had some sort of pullback close to or around 14%. Now, obviously, you can see from the chart that doesn't happen every year, but that is the average. Despite that, annual returns are positive 34 out of the last 45 years. So if you put that in context, even though every year we have some sort of pullback around, on average, 14%, we still finish positive in those years 34 out of 45 times. And so even when you look at this year is a great example. In 2025, we've had a market pullback of negative 19%. And so that was obviously the beginning quarter one of 2025 with all of the headlines about the tariffs. But up till the end of September, the market has increased in value by 14%. And so that's just a very prime example of how during the year we can get very volatile, very rocky moments in the market, but it does not necessarily dictate or tell us that we're going to have negative returns by the end of the year. And so again, I hope this helps kind of explain the sort of normal phenomenon of intra-year market volatility. And again, it goes back to rewarding long-term investors for keeping their eyes on the long-term picture and not making short-term decisions based on volatility in the market. I hope you found this helpful. We'll look forward to doing another chart of the month in November, and we'll see you next time.